Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of Zilliqa, taking a look at what's been going on most recently and what we might expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now in the description down below you're going to find links to our Discord server, a fantastic community talking crypto 24/7. It's completely free and I don't think you're going to be disappointed by what you find down there, so why not go ahead and check that out today. In the description you'll also find links to our new Cheeky podcast, a fantastic way to stay up to date with everything crypto on your daily commute to the office. Why not check that one out as well? And of course, if you are looking for a little bit more from the crypto space, you will find links to our Patreon service in the description down below. If that's your bag, why not check that out? Okay guys, let's waste no more time. Let's jump into this. Here we have Zilliqa paired up with USDT on the hourly chart, and Binance is the data source. Now, we have been tracking Zilliqa for quite interesting movements for a while. We're specifically tracking coming down lower than 3.999 down to this low point of 2937 or 2.937 cents. Then we had this 5-wave structure up. Now this 5-wave structure upwards is very interesting to me, mainly because we have some of these movements. So we go 1, 2, 3, 4, 5, a leading diagonal just in there. Okay, then we have 1, 2 here, 3, 4, and 5 just here. Okay, and then of course 1, 2, 3, 4, and 5. Okay, and so essentially what this is the pattern that we would look for on reversal. Okay, so this is a trend-based pattern. Okay, so this is a 5, 3, 5, 3, 5 structure. Okay, this goes by the name of an impulsive 5-wave structure in terms of Elliott wave theory. Okay, so this here is a trend. It's a trend to the upside. Now, normally a 5, 3, 5, 3, 5 structure, that's it complete, right? And then you look for corrections. You usually would expect a 3-wave correction to follow. This could be a zigzag, which is a 535 sub-wave count of an ABC, for example, but it's usually just 3 waves. Now, with pulling back down here, this looks like it could well be a zigzag pattern, because what we've got is wave 1, wave 2, an overextended 3, wave 4, wave 5, right? Then we pushed up inside a 3-wave move, 1, 2, and 3, and then we could be looking at a 5-wave drop, okay, completing a zigzag. Essentially, that would be an ABC from this upside. If I can grab that, let's grab the A on here, the B coming up here, and then a C coming down. Now, under this, if we were to take this low and take this high, move this over to here, then our expectation might be to drop the price down to as low as 2.858. However, that would actually invalidate this structure, because what I would want to do is I'd want to see us stay above this low point of 0.02937. Okay, so 2.937 cents. Ideally, that's where we would like to stay above, because staying above that area essentially allows us then to look at this as another 53535 structure upwards. Okay, so if we've got a 5-wave move here, let me just remove all these subwaves. Okay, if we've got a 5-wave move here, then our minimum expectation would be that we'd have another 5-wave move upwards. Okay, specifically on this particular scale, right? If all of these are the same scale here, so we should look for 5 waves up. So what I'm saying is I'm expecting a short kind of 5-wave move down. Okay, it does look like this may have started already. A little bit too soon to really know, but it could be that this here is a wave 1, this is a wave 2, we're going down into a wave 3 right now, then wave 4, then wave 5, right? And we just stay above 0.02937, okay, completing our zigzag pattern somewhere down here. Now, if I'm right in thinking that this is the trend-based structure starting to the upside, then essentially, you know, we would be looking at coming down towards this area, which I've already marked up here at 3.350. Okay, so 3.350 is an 88.2% retracement of our 5-wave structure upwards, which would be a typical wave 2 move. Okay, so if I'm right here and this becomes our kind of support level somewhere around here, it might go a little bit lower to be fair, but I'll leave it there for now. We'll just hypothetically use this 3.350 level. And if we take this, we go, you know, this is a wave 1. Okay, this is our wave 2, then we move up in a really significant wave 3, pull back for wave 4, up for wave 5. Okay, all of which would probably be mapped out on a 4 or 8 hour chart, something like that. Okay, so we'd end up with this kind of structure, which of course is a 5-wave move, which would consist of a 5-3-5-3-5, and of course there you'd have a 5-3-5-3-5 of a 5-wave move of a wave 1 move, for example. So you can start to see how they nest together, right? And trend-based patterns would be perfectly nested to see this surge upwards, right? And so the next one up would be very, very interesting to us. Does it continue with a really impulsive, strong move going higher than 1.618, or is it just a 1-to-1 ratio and it is still corrective? Because all of this could still be a correction pattern where we end up with just a short 5-wave move coming up here to 5849, for example. I'm pretty certain that's the level. Let me just check it. Grab that high, grab this low right here, just move it over to this line right there. Yeah, so basically if we come up here to 5849, okay, so 5.849 cents, then essentially all you've kind of got there is a corrective pattern, which is an A, a B, and a C. And of course, at this particular point up here, we would know that basically everything's overbought. We come towards the end of a correction. We probably want to come on out of it, and we are going to come back down into lower lows, because all of this here is a correction, not a trend. Okay, so although we've started off with a trend-based structure over this side, okay, it can of course just become a corrective structure if this does not go impulsive. Okay, so there's quite a few things to kind of think about for Zilliqa here, but essentially we are tracking to see whether or not the bottom is in here for Zil, or whether or not we are going to be continuing to the downside, right? So there's lots of things to kind of think about for Zilliqa. Some exciting times, some good accumulation zones will come from wherever this next 5-wave drop comes in, and then of course, riding that up into a significant surge upwards. Now, when we take a look at the stochastic RSI, you can see that we're oversold on the hourly, but we are almost oversold on the 4-hourly. We've got a fair amount to drop down on the 8-hour. And the daily is almost dropped down enough. So we are talking about, finishing off this corrective move before we start to go up into the next move higher. Okay, so essentially we are talking about a little bit more room to the downside before maybe moving up in a really significant way. Now, if we do drop down as low as maybe it'll come down lower, but let's just use 3.350 as a benchmark, and we'll to move up to that kind of 1-to-1 ratio. We're talking about a 74% push higher. So there's pretty significant moves to be made here with Zilliqa. So yeah, kind of things to watch out for. We're waiting to see this downside complete, and then we're going to start to map out how we move upwards from there. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.